Jamie Dimon just dropped $24 million to supercharge American shipbuilding with a brand new submarine facility at the Philadelphia Navy Yard, sending a clear message that JP Chase is all in on boosting the country's naval capabilities. This massive investment is a strategic move to revitalize the U.S. shipbuilding industry, which has been facing stiff competition from foreign players. By funding this state-of-the-art facility, Dimon is not only creating jobs but also positioning the U.S. to regain its dominance in the global shipbuilding market. The fact that JP Chase is taking the lead on this initiative is significant, as it highlights the critical role that private sector investment can play in driving economic growth and national security. The implications of this move are far-reaching, and it will be interesting to see how this effort pays off in the long run. But for now, it's clear that Dimon is committed to making a meaningful impact on the U.S. economy. Moving on, another finance heavyweight, Warren Buffett, has been making headlines for his candid comments on Bill Gates' association with Jeffrey Epstein. Buffett recently called Gates' actions distasteful but also emphasized that people make mistakes, in a clear attempt to distance himself from the controversy. Notably, Buffett's annual charitable stock gifts did not include the Gates Foundation for the first time in 20 years, a move that may be seen as a subtle rebuke. This development is significant because it highlights the complex web of relationships and reputations in the world of high finance. Buffett's comments and actions are closely watched, and his decision to exclude the Gates Foundation from his charitable gifts may have far-reaching implications. Speaking of smart financial moves, if you're not already looking into Treasury inflation-protected securities, or TIPS, you might be missing out on the bond deal of the decade. These rare gifts are essentially a guaranteed way to beat inflation, and it's time to lock in a generous payout. With inflation concerns still looming large, TIPS are an attractive option for investors looking to hedge their bets. The current market conditions make TIPS an even more compelling choice, and savvy investors are taking notice. In other news, KKR & Company and Energy Capital Partners have just sweetened their bid for DCC plc to a whopping £5.7 billion, marking a significant turning point in the drawn-out takeover process. This move gives the companies some extra breathing room to complete the deal, and it will be interesting to see how it all plays out. The fact that KKR and Energy Capital Partners are willing to shell out such a large sum underscores the strategic importance of DCC plc in the energy sector. As we look to the future, it's also worth considering the importance of planning for the unexpected, especially when it comes to Social Security claims. The reality is that life expectancy is just a rough estimate, and the actual date of death can have a significant impact on surviving beneficiaries. While it may seem callous to focus on the financial implications of mortality, it's essential to have a clear understanding of how Social Security claims work and how they can affect your loved ones. As we wrap up today's episode, keep an eye out for tomorrow's show, where we'll be diving into the latest developments on the U.S. labor market and what they mean for your wallet, and don't forget to tune in to find out how a potential interest rate hike could send shockwaves through the global economy.